Good morning, Trinidad and Tobago, and welcome to the Bourse Report. This week, we take a look at the most recent financial results of the three stocks listed on the conglomerate sector of the Trinidad and Tobago Stock Exchange. I refer, of course, to ANSA McAL, GraceKennedy, and MASSY Holdings Limited. With business operations dependent on consumer-driven activity, the conglomerates will confront several challenges to maintaining performance, particularly those with significant interests in the economy of Trinidad and Tobago. Indeed, MASSY and McAL, with their considerable exposure to the Trinidad and Tobago market, also offers some insight into local consumer activity. Accounting for about 16% of the composite index, and as its second largest sector, the performance of the conglomerate sector will also have a significant impact on the overall direction of the stock market. Let's now take a look at some of the major challenges to the sector, and turning to our first chart, conglomerates and almost all other companies are facing challenges including lower energy revenues, which have the double impact of limiting government spending and curbing foreign exchange inflows. A knock-on effect of lower energy revenues has been the implementation of fiscal adjustments, such as the increased VATable list, an increase in some consumer-related taxes like motor vehicle tax, and a decrease in fuel subsidies, which have had a direct impact on the consumer. The ongoing depreciation of the Trinidad and Tobago dollar would also impact conglomerate performance, pressuring operating margins through an increase in the cost of goods imported for sale. This depreciation is likely to continue as foreign reserves on a year-on-year basis have fallen about 14% from US $10.7 billion to US $9.2 billion as at April 2016. A possible indicator that US dollars needed for import and distribution businesses may become more expensive. All of these factors would effectively weaken consumer purchasing power, while consumer sentiment and confidence may also be negatively affected as TNT works its way through recession. So have the challenges from a weaker TNT market materialized into weaker first calendar quarter earnings for the conglomerates? Taking a look at our second table, which compares January to March earnings in 2016 versus 2015, it would appear so. We focus on ANSA McAL and MASSY, whose revenues from Trinidad and Tobago account for approximately 77 and 49% respectively of total revenues. GraceKennedy, on the other hand, earns less than 7% of its revenues from Trinidad and Tobago. On an earnings per share basis, McAL was resilient with no change in its quarterly earnings, while MASSY's earnings per share fell almost 11% in the comparable period. ANSA McAL was able to deliver minor revenue growth of 0.5% in the quarter, while MASSY's revenues declined just over 3%. MASSY did, however, fare better in controlling its expenses, with expenses declining just over 4%. In terms of profit before tax, both McAL and MASSY recorded reductions in their first quarter calendar earnings of 2.2% and 2.7%, respectively. And from a profitability perspective, McAL experienced a slight decline in its PBT margin, or profit before tax margin, while MASSY was able to hold its margins stable at 6.7%. So how can an investor with this information in hand take advantage of potential opportunities in these stocks? Well, considering the value offered by these equities is always a good place to start. Turning to our final graphic, we note that GraceKennedy's stock has advanced almost 30% year to date, while McAL and MASSY have retreated approximately 6% and 22% respectively. When looking at how much an investor pays for a stock per $1 of its earnings as measured by the price to earnings multiple, MASSY appears to offer the most value to investors at a 7.6 time multiple. With respect to McAL, some investors may value the stock more because of its perceived earning stability, which reflects in its higher multiple of 14 times. From a dividend yield perspective, MASSY offers the most value with a 4.4% trailing dividend yield. Both McAL and MASSY should have room to preserve their absolute dividends paid per share, given the relatively low dividend payout ratio of 31% and 33% respectively. Notably, GraceKennedy's payout ratio is quite low at 22%, which could be a sign of potential increases in dividends on the horizon, should the company's growth trajectory in the first quarter be sustained. MASSY and Grace also offer good value when looking at their market-to-book ratios of 1 time and 0.8 times respectively. In closing, 2 points should stand out to the savvy investor. Firstly, the conglomerate sector, particularly MASSY and McAL, with their exposure to Trinidad and Tobago, will continue to face challenges from a weaker economy and consumer. Secondly, from an investment perspective, The conglomerate sector offers something different for different types of investors. In the case of MACAL, investors may take comfort in the stock's apparent resilience in earnings, though it may be too early to tell from just its first quarter performance. With regard to MASSY, value investors may be attracted to the stock's ample dividend yield and low PE and market-to-book ratios. Importantly, though, MASSY's earnings have been the hardest hit amongst its peers thus far as recession tightens its grip on the local economy. And finally, GraceKennedy may appeal to the investor looking for stocks offering lower exposure to the Trinidad and Tobago market, while providing a platform for growth if the company's first quarter earnings are anything to go by. That's all for this edition. For this week's detailed report and more on these and other investment themes, visit our website at bourseinvestment.com, check out the Bourse Securities Facebook page, give us a call at 628-9100 or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.